Welcome back to Stocklabs for another market recap. First full week of March in the books, concluded on the 10th. And as the fly puts it, maximum happenings this week. So the market overall was kind of trending down most of the week. There was like a little bit of an up move on Monday that closed well off the highs. And then the rest of the week spent kind of moving downwards. We got some economic data on the claims numbers were on Thursday, which were, I don't think, anything special. And then the non-farm payrolls number on Friday was strong, over 300,000. Market was expecting something closer to 200K. And also on Friday morning, we had the collapse of Silicon Valley Bank. So banks were under duress all week. That kind of culminated Friday. Bank was taken over by FDIC, and they are going to be sorting out getting depositors their money and all of this stuff like that. And there were some knock-on effects. Other banks that people were thinking were in similar situations were sort of coming under fire as well late in the week. As far as how the indices went, overall, pretty bad. So Q's actually outperformed, only down 3.9%. The Dow was down 4.5%, S&P was down a little over 4.5%, and the Russell got torched, down 8% for the week. So bad performance overall. And if we look at the leadership stocks, they also kind of just went along with the general market trend. Got Apple was only down 2%, outperformed. Microsoft, same thing, outperformed Nasdaq and the S&P. The Tesla got hit pretty hard, down 12%. Netflix also went red on the year, down 7% for the week, down 1% for the year. Amazon has been just on the struggle bus for weeks. Down 4.5%. I mean, this is kind of in line with the S&P, but I mean, Amazon it's not looking good for Amazon. Same thing with Google, even though this week wasn't terrible for them compared to the market. They're kind of flirting back with this unchanged line on the year. And I think if it pushes down back below, if it goes red again for the year, you're going to see another sort of leg lower while people abandon ship there. Meta still outperformer for the year, up 48%. Same thing with Nvidia, up 56%. I mean, who knows if this is going to be kind of able to hold, but for now the performance is good there. I mean, people don't really have a reason to vacate them. Industry wise, for breadth, as you can imagine, was not good. So healthcare led on the downside, almost 10% for the median health stock, down. And basic materials also were getting hit, down 8%. And the financials, 5% is pretty big move for financials. As far as, the volatility of the sector is it's generally not that high, but when you get these kind of existential threats, like, you're sort of seeing with Silicon Valley and other banks, let's say the regional banks, it's concentrated to mostly the big money center, systemically important ones. Those have kind of been, they traded down, but they're not like under threat of being zeroed. But a lot of these regional banks, people are going to be combing through trying to go after them. So financials down 5%, bad week for them. Tech down 7%, median tech stock, so much worse than the Nasdaq, which was down 3 something, almost 4, 3.9, right? So the median tech stock was down almost double that, over 7%. Utilities down 4%, industrials down 6, and consumer down 6.6. So bad week. No one's hiding anywhere. Not a single green subsector from the market. So we've got, okay, I think the shell companies, you just read this as SPACs. I think they didn't move on the week because they've just been pulverized to zero already. So the telcos were kind of flat. Grocery stores, okay, I mean, you could see like, the two things that people are going to keep paying is their cell phone bill and their groceries for the week. So, they're still red, but they weren't like obliterated. Let's go the other way on this. What are the worst performers? We've got EVs. So we said Tesla was down 12 something. We've got some spec bio stuff. These sorts of companies were also said to be tied up in the Silicon Valley debacle because a lot of them are holding money there and they no longer have access to it. So making payroll, anything they need operating cash for is kind of TBD until the FDIC can sort it out. We've got some more oil and gas stuff, some software stocks, more biotech. You can see these are kind of, there's a lot of spec stuff on here, but double-digit declines, all the way down here. So we've got, okay, see, this will be 100. 25, 150, 155 sectors down over 5%. So big washout in the market. Generally, when you see these, there will be some, when you see this kind of disgusting breadth, there will be some follow through because no one's willing to really just jump back in after they unloaded everything. They're trying to, they're waiting for some different entry point. So I would take this as a short-term kind of trend indicator that like the selling was motivated, let's call it. So most likely there's a little bit more to be done, but on the other hand, these big washouts result in snapback rallies. So, can expect to see some follow through and then a snapback where you start retesting some of the higher levels. At least that's my general kind of view on it. The breadth from a market cap standpoint. Okay, let's get rid of this split. 1 to 5 billion, down 8%, so kind of in line with the Russell. 5 to 10 billion, down 7.5. 10 to 50 billion, down 6. 50 to 100 billion, down 4.7, and 100 billion plus, down 4.5, kind of just in line with the, over 50 billion, 100 billion, kind of in line with the S&P, but you could see just like a lot of blood everywhere, up and down the market cap ranges, up and down the industries. It was kind of like, just get me out of the market. I don't want exposure to equities. So that was kind of the mentality this week, even before the blow up of SVB. It was already trending in that direction. That was kind of the cherry on top to cap off Friday. But intelligence for this week, what do we have? Bear China again, bear tech. Okay, oil and gas maybe bounce. Bear Fang. South Africa bearish for anyone trading the South African market. Consumer services, I don't know. This sounds like it may be related to financials, but I don't know if this is financial related or what. And mid caps bearish. So it looks like it's going to be a tough week for the market. I mean, I think probably you can expect that the SVB situation is just hanging over the market. There's also going to be contagion fears and all of this stuff like that. So anything that's like a mid-major bank, regional bank, like these sorts of sized things that are not considered, you know, let's just be realistic about, they're not considered important. So they're uh they're free to die basically. And their stock prices, are going to start pricing that in. We've got on the bear side, so as I forget, I think this might be cannabis related, which is basically always bearish. It's like free money bearish to short. It's like free money to short cannabis stocks at any time you want. We've got gold miners bearish. These are bull ETFs. They're on bearish screen, so bearish gold miners this week. Bearish socks. Okay, so this is kind of conflicting the rest of everything else because this is a bear semiconductor ETF. This would imply that semis were going to maybe bounce this week. We've got Tesla bull ETF is bearish, so bearish Tesla this week, bearish ARK this week, and whatever the heck this thing is bearish. So it's looking like a bearish week overall. One thing, we do have an oversold signal. It's only on 3-month look back, but it is the first one in a while since October, which is basically 6 months ago. It's a long time to get an oversold signal, and the market is not really near low. We didn't get oversold signals at these lows in November or the start of the year, but we've got one now. Now it is partially because the threshold has come up since the more recent trend was up. So that's why I'm a little bit. That's why I say only a 3-month signal. Generally, I like to wait for these 6-month and 12-month signals to hit, which haven't yet. Still need a little bit lower on the oscillator to trigger those. So I'm pretty open to a bear week this week. I think you're looking at follow through from the SVB blow up and any other related blow ups. I think people are just going to be battening down the hatches, and the January rally has been long forgotten. We're into March. February was bearish. I mean, March has started off poorly. I think you're gonna see people kind of step away and be hesitant to jump in and buy anything. Expect the Federal Reserve to be talking all sorts of stuff. There's going to be rumors. What's going to happen with the bank? What facilities is the Fed going to set up? Are they going to slash rates? I think like all of that is just going to be speculative. The only thing I will say is I think that Jerome Powell he's not going to want to slash rates right away. He's going to try and frame this as like, it's only one bank. There's everybody else is okay. We're monitoring the situation, but for now, we're kind of just going to take care of this thing, and everything else will just move on. So I don't think the market is going to like that communication if he comes out like that. So I expect downside this week. There will be I think there's option expiration this week as well, which is always volatility injection. So it should be fun. Bear bias this week, option expiration, Fed, Silicon Valley blew up, and we'll just have to see how it goes. Expect wide ranges and take care of your risk. So we'll talk to you guys next week, and good luck. Bye.